Imagine a world without stock markets, no Wall Street, no Nasdaq, no global trading floor. A world where businesses grew slowly, governments borrowed cautiously, and fortunes were made only by inheritance or conquest. Now ask yourself, how did humanity go from this world to one where trillions of dollars change hands daily and a single rumor can move entire economies? The story begins centuries ago with merchants, ships, and a radical idea. What if you could own a piece of a company before it even made a profit? This is the birth of the stock market. And as you will see, it's a story of ambition, greed, innovation, and risk, a story that still shapes our world today. Before stocks existed, commerce was a slow, dangerous game. Merchants financed voyages with their own money or borrowed from local lenders. A single failed journey, storms, piracy, or spoiled goods could bankrupt a family. Europe in the 16th and 17th centuries was a world of trade empires. Venice, Genoa, and eventually the Netherlands dominated global commerce. Enter the Dutch East India Company, formed in 1602. It was the first company to sell shares to the public, spreading risk and reward across many investors. For the first time, ordinary citizens could participate in global trade. But this innovation came with a twist. Human nature, speculation, greed, and panic would follow, repeating the same patterns we see in markets today. The first formal stock exchanges emerged in Amsterdam. Merchants gathered in coffee houses and exchange halls, negotiating prices for company shares. The Amsterdam Stock Exchange became a hub of innovation and chaos. Investors bought shares in shipping voyages, mining ventures, and colonial expeditions. Yet these markets were volatile. Rumors of shipwrecks or plunder could send prices soaring or crashing overnight. People became rich, and others destitute in the blink of an eye. Other nations quickly followed. By the 17th century, London had its own stock exchange. In Paris, merchants created trading halls for government bonds. Across Europe, a new financial culture was emerging, buying and selling promises of future profit. By the 18th and 19th centuries, stock markets were central to industrial expansion. Railways, banks, factories, and mining companies raised money by issuing shares. The promise was simple: invest money today, receive profit tomorrow. But with opportunity came risk. Speculative manias erupted like Britain's South Sea bubble in 1720, and fortunes evaporated overnight. Yet these crashes didn't stop markets, they matured them. Governments began to regulate trading, requiring disclosure, contracts, and legal frameworks. Across the Atlantic in the United States, stock trading grew rapidly in the 19th century. New York City became a hub for commerce and finance. By the 1860s, the New York Stock Exchange was formalizing rules, tracking prices, and creating standardized systems for buying and selling shares. Markets weren't just places to trade, they were instruments to build nations, fund railroads, bridges, and eventually skyscrapers. With growth came speculation and inevitable collapse. From the tulip mania in the 1630s to Black Tuesday in 1929, history shows a repeating pattern. Excessive optimism, over-leveraging, sudden loss of confidence. Stock prices soared far beyond underlying value. When reality hit, it hit hard. Wealth disappeared, banks failed, economies froze. For example, in 1929, millions of Americans lost their savings in a single week. The crash triggered the Great Depression, showing that stock markets weren't just a game, they could influence the entire economy. After each crash, governments learned slowly. In the US, the Securities Act of 1933 and the Securities Exchange Act of 1934 were created. The SEC, Securities and Exchange Commission, monitored trading, ensured transparency, and punished fraud. Globally, nations experimented with regulations to prevent mania while encouraging growth, yet human behavior remained unchanged. Bull markets, bubbles, and crashes continued. The stock market, it seemed, was a mirror to human emotion, fear, and greed in perpetual motion. Regulations helped, but markets still crashed. 1987's Black Monday, the dot-com bubble, and the 2008 financial crisis all followed similar patterns. Leverage, derivatives, and speculation created modern financial instruments more complex than anything the Dutch East India Company imagined. Governments intervened with bailouts, reforms, and stimulus packages, but crashes never disappeared. What does this teach us? That the stock market isn't broken, it's a reflection of the human desire to grow, take risks, and imagine wealth, and when unchecked, that desire can bring the world to its knees. Today, stock markets are global, digital, and instantaneous. Retail investors trade alongside hedge funds, algorithms, and AI systems. Stocks rise or fall on tweets, news, or rumors. The speed and scale are unprecedented, yet the psychology is the same. We still see bubbles, cryptocurrency, meme stocks, SPACs, greed, optimism, fear, and panic. The same forces that drove early Amsterdam traders drive modern markets. History repeats itself in new forms on bigger stages. So what can we learn from the birth of the stock market? First, the market is a tool, not a guarantee. It channels human ambition, but amplifies human error. Second, crashes are inevitable. Bubbles form when we forget the lessons of history, when optimism overrides reality. Third, regulation matters, but cannot eliminate human behavior. Transparency, oversight, and education are our best defenses, not miracles. The stock market is more than numbers on a screen. It is a living story of human innovation, greed, hope, and fear. Final thought. Every trade you make, every investment is part of that story. And history shows understanding the past is the only way to navigate the future. Call to action. If you found this story fascinating, subscribe for more documentaries on finance, history, and the forces that shape our world. Hit the bell to never miss an insight into the systems that govern our lives.